welcome to Fletcher Finance. Let's talk finance, wealth, business, and life. What will the market do? No one knows, but everyone cares. I'm your host, Russell Fletcher, and let's get started. Hello, everyone, and welcome back to Fletcher Finance. Happy Yom Kippur to our Jewish listeners. Today's episode, I'm going to be talking about oil prices, gasoline prices, and how they are and are not correlated as much as the markets would like you to think. We all know the routine. Oil prices go up, gasoline prices shoot up as well. Oil prices come down and gasoline prices slowly creep down. One would think that with all the buying, selling, and producing of gasoline, diesel, and fuel oil, that the oil company stocks and ETFs would be going up as well. What we find, though, is that has not been the general case over the last year. Where is all this money going, and why does it seem that things that should be correlated are not? Let's take a deeper look at the whole thing. Over the last year, some of the largest oil companies have either gone down or have stayed pretty flat in stock price. The big oil companies are Occidental Petroleum, ticker symbol OXY, Chevron, ticker symbol CVX, and the Vanguard Energy ETF Fund, ticker symbol VDE. In the same period of time over the last year, the price of a barrel of oil has gone up. Currently, WTI crude is going for $92.27 per barrel. There was talk for 2 days this last week on the major business networks that oil could reach $300 per barrel in the next year, but that was soon retracted. While all of this is going on, the price of gasoline is an average of $2.63 per gallon. Of course, for those of us on the West Coast and in the metro areas of the East Coast, it's a lot higher, along with Alaska and Hawaii. If one really looks at the price of oil in the past and the cost of gasoline, then it can be noticed that they don't always correlate, especially when the price of crude oil goes down. Why is that? The answer is simple. A lot of it has to do with refining capacity and season. California has its own special summer blend, which can only be produced in California. There are transportation costs as well. Companies can also cut back on production and store crude oil for later refining. Crude oil can be stored for long periods of time without degradation. Remember, a new refinery has not been built anywhere in the United States since 1977. This was back when Jimmy Carter was president of the United States. Now, a new refinery in Texas was built in 2022 and came online in 2023, but there was a long stretch where refining capacity did not keep up with the needs. There is also the fact that the prices of a barrel of oil quoted for today are not for today, but for contracts that are 3 months out. This is a little known fact of the petroleum commodities market. So when gas prices rise because oil prices jumped in one day, it has no real effect on anything real until 3 months later. The same thing goes for natural gas mineral rights. This, along with the ease of storing crude oil, bunker fuel, which is for ships, fuel oil, and diesel for long periods of time, also indicates that the price of the crude oil and refined products are not correlated. There are a few refined petroleum products that do have a limited shelf life, such as gasoline. This is why gasoline is produced in a system called just-in-time versus other distilled petroleum products. This leads to why the stock prices for petroleum companies do not shift a lot over time. They are well-established, dividend-paying stocks. Most of the money earned by the companies goes towards developing new sources of crude oil, maintenance, and payments to shareholders. Also, the petroleum industry is one of the top payers in employee compensation. In conclusion, don't let the hype of barrel prices fool you. The markets are not really tied to each other, and the companies making the most money off the industry are the refiners, not the local gas station. Their margins on gasoline are razor thin. Should this information be more well known? Yes, it should. The more you know, the better you can protect yourself and know when you are being told the truth and when someone is blowing exhaust your way. Thank you for tuning in, and we'll see you on the next episode. If you like this podcast, please hit the like button below and make sure to hit the subscribe button if you already have not. To make sure you don't miss out on future episodes, tap that bell notification icon and stay updated. Leave your comments below. I do read them all, and the discussions can be interesting.